I love being active in the stock market. Being an active swing trader is my bread and butter. It pays my bills and funds my long-term investing account. However, as investors, being too active with our positions can sometimes be our own worst enemy. Selling out of our positions anytime it makes a big move in either direction can limit our profit potential. Sometimes it's just better to buy into that stock that you like long term, set a stop loss, and forget about it. You go into your investment account a few years down the road and you realize that investment you made into that certain stock is up a couple $1,000%. Being too active in your long-term investments can be a bad thing. So in today's video, we're going to be talking about my top 3 high growth stocks that I see long-term potential in, that I'm considering investing in, buying, holding them forever, and just forgetting about them. These are long-term stocks that I see massive potential in. They're going to the moon, baby! What's up, traders and investors? If you're new to the channel, this is Touchdown Trades. My name is Kevin, your trading BFF, your stock market bestie. We are the #1 stock market investing and active trading channel on all of YouTube. And today we're going to be breaking down 3 stocks that I consider to be buy, hold, forget, forever type of stocks. The type of stocks that you want to be in long term that have massive high growth potential. So as always, let's secure that bag by making smart investments and sound trades. Let's get it. What's good, traders and investors? Before we get started, before we start talking about my top 3 stocks that I'm looking to invest in long term, buy them, hold them forever, and forget about them, and do me a favor and go ahead and destroy that like button for me. These videos take a lot of time, effort, research, due diligence, and I love making them, but all I ask for in return is to go ahead and destroy that like button. Also, shameless plug, we got the private Discord chat up and running. It is blasting off. I called out the workhorse buy. That day it was selling off and has recovered nicely. So anybody that's in the chat room got to see that workhorse position that I entered real time. So if you want to see my trades as I buy them and sell them in real time, check out the 2-week free trial. The link is in the description for that 2-week free trial for the private Discord channel. Ticker number 1, VERI. Veritone Inc. is a artificial intelligence data company. Veritone is a machine learning, AI, and data analytics company. We all know how big of a business data is. We also saw the Snowflake IPO go bonkers. We also have seen what these cloud companies are doing. Companies like Salesforce, with the data aspect. Data is gigantic business. What Veritone does is they offer different services for their customers. One, they can analyze video using artificial intelligence for like police department, public transportation agencies, and they can analyze the data, look through the pictures in the video, and see if there's anybody that needs to be like blurred out so they can release it to the public. They also have a data analytics branch to their business where they can help businesses sort through their data, increase their return on investment. This is where the big money is at, in my belief. Also, they have a branch of their business where they help courthouses and jails transcribe and translate calls. So if somebody's calling out of a jail to their wife and they're speaking Spanish, the jail needs to get that translated and transcribed. Make sure homie's not planning to escape out of the jail. Veritone can transcribe that for them and translate for them as well and give it a transcript to the jail in a fast amount of time. The jail can analyze the transcript and make sure there's nothing crazy going on. Jails are huge business. It is a multi-billion-dollar business. So if every jail around the country needs to have a translator and a transcriber on their calls done, that is massive business. And obviously not every jail is going to hire Veritone, but it is massive business and it's just growing and growing as our jails and prisons around the country are overcrowded. Also, I don't even think that's huge business, right? The jail aspect of it is huge business, but I don't even think that's where the growth is going to come from. I think it's going to come through the data analytics and helping companies advertise to their target customer base. Some of their licensing partners and trading partners, we got ESPN, NBC Sports, NFL Network, DraftKings, Fox News. Some of their content partners, we got Bloomberg, CNN, NCAA, the New York Times. So they have some already really big partners. Also, we have some huge customers already. ESPN, iHeartRadio, CNBC, USTA, which is tennis, Fox Sports. Some of their government customers. We have the U.S. Department of Justice, Anaheim Police Department. This company is growing fast, and I mean fast. Over the past 5 years, the sales have increased by an average of over 60% per year, and we're expecting an earnings per share increase by over 50% a year over the next 5 years. So this is a rapidly growing company, and I expect that growth rate to increase exponentially in years to come. And one of the best parts about this stock is we are getting it at a discount. It ran up from $1.22 to up to almost $20 a share. It has since retreated and pulled back to under $10 per share, and I think we're getting this stock at an extreme discount. I'm going to be buying any pullbacks back down towards that $6.50 level, so I'll probably start my buying around 8 on the next pullback, and then I'm just buying and holding and forgetting about it. And I'm going to look for this thing to break all-time highs up here. Not all-time highs, but the most recent highs at $20 per share. Ticker number 2 is going to be one that we talked about quite a bit on this channel. BLNK, Blink Charging, is one of those stocks that I want to buy, put in my long-term account, and just forget about it. I don't even want to look at it because I bought it way down here around $6.50 on the latest pullback, and it's up to over $10 a share. And when I see that profit in my account, it's like, should I sell some of it, lock in some of that profit? But I know the amount of potential that this stock has, so I'm not going to sell any. I'm going to hold it, and I'm just not going to look at it. But I bought it way back here on the first ramp up, and I bought it at like $5.75 a share on this pullback, and I sold it for the first time up near $12, and I made a bunch of money. It was like a $25,000 trade. And then this second pullback, I alerted the chat room that I was buying it back up here, and I am long Blink. I have a nice profit, but I don't even want to look at it because I know the potential is massive. If you have watched my videos in the past, you know how big and how high I am on EV charging. I think as the EV penetration rate increases, EV charging companies are automatically going to make more money just because more people are going to be driving around in EV cars, and they're not even going to have to market their services because when people pull over, they're just going to have to charge their car. They don't even have to market. It's just going to happen for them as we evolve to using EV cars. Currently, Blink has over 5,600 commercial EV charging stations in 40 states around the United States. They have 8,900 residential charging stations deployed around the U.S. and total of 15,000 EV charging stations, with direct access growing to a registered member base of 180,000 United States residents. I believe the money is going to come from a membership subscription basis more so than selling the EV charging units. So look at this map, and I'll explain myself real quick. If you've watched my EV charging videos in the past, this is probably me repeating myself. Just for those who haven't seen my take on EV charging and where I think the big revenue is going to come from, I'll break it down real quick. So we have the map of Blink's charging units around the United States. So let's say you live in Nevada and you drive an EV car. You can buy a monthly subscription to Blink's charging network. Let's call it $50 a month. And then anytime you need to stop and charge your car, you have a membership card, you swipe it, and you don't have to pay each time you want to charge. You just pay that monthly subscription fee. The charging as a service will provide these companies, these charging companies, a reoccurring revenue which will help them grow exponentially. Currently, Blink Charging has a market cap of only $200 million. That is so extremely low in my opinion that I think within the next 3-4 years, this is a $2 billion company. No doubt about it. I think it could be a $5 billion company in the next 3, 4, 5 years. But let's just call it a $2 billion company. We'll go on the low end of the growth spectrum. That means that's a 10x in price. That gives this Blink a price of $100 a share. That is why I do not want to sell one share of this Blink Charging, and I want to add on any pullback. ChargePoint is about to go public with a valuation of about $2.5 billion. ChargePoint does have a bigger infrastructure currently than Blink, but I do believe Blink has the potential to catch up with ChargePoint. I believe both of those companies are going to go to the moon. I am invested in both Blink and ChargePoint. I think they both have massive potential, as they're really not going to have to do anything to market their services. As more and more people start to drive EV cars, it's just going to happen on its own. Nordstrom and the rest of retail brick and mortar has been decimated by not only the influx of e-commerce, but also the Rhinoceros Rex has shut down most of the stores around the country. But I am still a big believer in this Nordstrom because of their customer base. They have a high-end product line. If you want to buy Gucci loafers, Ferragamo loafers, a Gucci purse for your wife, a Louis purse for your wife, you have to go through a higher-end company. You're not going to be buying that from Amazon. Amazon is not Nordstrom's competitor. Nordstrom doesn't really have very many competitors. Nordstrom needs to be shifting their focus from an in-store retail perspective to an online perspective. Sell that higher-end merchandise online, but keep a couple retail stores open because people like to have the ability to go exchange or return the stuff they bought online in person. So I believe Nordstrom is going to survive the retail onslaught because of their higher end product line and their higher end customer base. They just need to switch the focus to an online presentation and shift away from the brick and mortar. Shut down your failing brick and mortar stores. Close them. Don't even worry about them. Just get rid of them. Keep the brick and mortar stores that are above water open and focus your attention to your online sales, and they will be just fine. They can even become a growth story because they were just bleeding so much money because of their failing brick and mortar stores that if they chop the hand off that has the infection, they can become stronger than they were before. This Nordstrom has a market cap of only $2 billion. Last year, they had sales of $12 billion. That means the market cap is 1/6 of the sales of last year. That gives it a extremely low price to sales ratio. And yes, the sales are going to go down this year because of the obvious, the Rhinoceros Rex. All their in-store shopping has been stopped. It's been shut down because of the quarantine. But I expect them to use this time to reflect and realize that they don't need as much in-store retail. They can cut the stores that are failing, just shut them down, focus on online shopping, and they will come back bigger and stronger than ever before. This is a company that I expect to come back and actually be better than they were before the Rhinoceros Rex, because the Rhinoceros Rex has made some companies box them into a corner and make them realize that they need to change their business model or they're not going to survive. And Nordstrom is one of those companies. I believe this is a $30 stock within the next 2-3 years. I think we get back to $30 a share. We're currently trading at just above $11 a share. We keep dropping and I keep adding. I'm going to keep adding as long as it keeps dropping because I have that much faith in this company. So $30 a share, that's 3x potential to the upside. We were trading at $45 a share just a couple years ago. So I believe $30 per share is reasonable, especially if they up their online game. All right, guys, thanks for watching. If you haven't yet hit the like button, please do so. It helps me out tremendously, helps me and the channel grow. If you're not yet a subscriber, please consider subscribing. We're growing faster than ever, and I love every single one of you guys. Make sure you hit that notification bell so you get alerted every time I post a video. Until next time, peace.
Drop.